Ladies and gentlemen, good day and welcome to the CGPower&IndustrialSolutions Limited Q3 FY24 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Renu Baid from IIFL Securities Limited. Thank you, and over to you, ma'am.
Very good evening, ladies and gentlemen. Today we have with us the management team of CGPower&IndustrialSolutions with us to discuss the third quarter FY24 earnings call. From the management team, we have Mr. N. Srinivasan, Managing Director, Mr. Sushil Todi, Chief Financial Officer, Mr. Ramesh Kumar, President Industrial Division, Mr. Mukul Srivastava, President Power Systems, Mr. Ajay Jain, Vice President Transformer Division, and Mr. Chidambaram Balakrishnan, Vice President Railway Division. So without taking much time, I now hand over the floor to Mr. N. Srinivasan for his opening comments, thereafter which we can start with the Q&A. Thank you and over to you, sir.
Yeah. So thank you, Renu. Good evening, ladies and gentlemen. Let me first extend a warm welcome to you all for the Q3 FY24 earnings call. I am Natarajan Srinivasan, Managing Director of the company. I would like to introduce my colleagues who are with me on this call. Ramesh Kumar, President of Industrial Division, Mukul Srivastava, President Switchgear Business, Ajay Jain, Vice President Transformer Business, Chidambaram Balakrishnan, Vice President Railways, Sushil Todi, CFO. Company performance. Q3 FY 2023-24 performance. Sales grew year-on-year by 13% and profit after tax before exceptional items grew by 13%. For the 9 months ended 31st December 2023, sales grew year-on-year by 15% and profit after tax before exceptional items grew by 26%. Aggregate sales for the quarter were higher at 1,860 crores, recording a growth of 13% year-on-year. Profit before tax before exceptional item was at 282 crores, 15.1% of sales, as against 274 crores, 16.6% of sales last year in Q3 of FY23. Return on capital employed annualized for the quarter was at 38%. Free cash flow generated for the quarter was 246 crores. Unexecuted order book as on 31/12/2023 was 34% higher year-on-year at 5,556 crores compared to 4,136 crores as of 31st December 2022. Segment-wise performance, Industrial Systems. Aggregate sales for the quarter were higher at 1,214 crores, recording a growth of 5% year-on-year. Profit before interest and tax was at 169 crores as against 213 crores in Q3 of FY23. During the quarter, the big demand for motors led to a price war, with everyone trying to sell their volume, poach into customers to retain their market share. The company took a strategic call to sell equally aggressively to retain the customers and protect its stores. This had the effect of dropping the margins on the one hand and a market share gain on the other. Unexecuted order book as of 31st December 2023 was 9% higher year-on-year at 1,982 crores, vis-a-vis 1,824 crores as of 31/12/2022. Power Systems. Aggregate sales for the quarter were higher at 646 crores, recording a growth of 34% year-on-year. PBIT was at 99 crores as against 57 crores in Q3 of FY23. The profit PBIT to sales was 15.3% as against 11.7% in Q3 of FY23. Margins were higher year-on-year on account of execution of export orders with better margins, favorable product mix, and better operating leverage. Unexecuted order book as on 31/12/2023 was 55% higher year-on-year at 3,574 crores as against 2,312 crores as of 31/12/2022. Consolidated results. Consolidated results include the performance of operating subsidiaries in Sweden, Germany, and Netherlands, the Drives and Automation Europe, CG Adhesive Products India, and other non-operating and holding subsidiaries. Aggregate sales for the quarter were higher at 1,979 crores, recording a growth of 13% year-on-year. PBT was at 264 crores in Q3 of FY24 as against 285 crores in Q3 of FY23 and 303 crores in Q2 of FY24. Unexecuted order book of drives and automation Europe as on 31/12/2023 was 4% higher year-on-year at 17.2 million euro as against 16.5 million euro as of 31/12/2022. Key events in this quarter in Q3. The company had filed an application with Ministry of Electronics and Information Technology, Government of India, seeking approval to set up an outsourced semiconductor assembly test OSAT facility and the grant of subsidy for the said project. The estimated investment on the project over a period of 5 years is $791 million, and the same is expected to be funded by a combination of subsidy, equity, contribution, and debt as required. The application preferred has been pending consideration of Government of India. The company signed a term sheet with Keraja Group for the joint development of the company's property CG House situated in Annie Besant Road, Worli, Mumbai. Necessary approvals from the authority are being sought for the redevelopment. During the quarter, the company received order from the Honorable National Company Law Tribunal sanctioning dissolution of the company's wholly owned subsidiary CGPower&IndustrialSolutions Limited. The company has given effect to the said order in the accounts, and the same is reflected in profit and loss account under discontinued operation. This is yet another legacy issue that has been resolved. Between myself and my colleagues will be happy to answer the questions. See, on the whole, I think we had a good quarter, but I must also tell you this, there has been a deferment of revenue of up to the tune of about 35 crores in the power systems business because of some inspection issues. Inspection got delayed, and then on 31st we could not dispatch. Maybe the next day also we could dispatch actually. So anyway, this under the revenue recognition norms, this could not be booked as revenue for this quarter or this month and December and then this quarter. This had a profit implication of about 16-17 crores. Similarly, there is a one-time expenditure on account of a transformer replacement. For which pending insurance claim we have booked a provision of about 10 crores. This is also one time. So these but for these our profit would have crossed about 300 crores for this quarter. We'll be happy to answer questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur Sharma from HDFC Life. Please go ahead.
Hi sir. Good evening. Thanks as always for your time. Just a question starting off was on the motors business. Where you kind of highlighted a fairly weak demand environment and possible price war. So I'm just trying to understand versus when we spoke last quarter. Where are you seeing this weakness? Is it broad-based? Is it any specific segment which is kind of slowed down sharply? Is it, government-driven orders? Just some color there. And when do you think you could start seeing some pickup also on this side?
So there are two aspects to this question. One is, in the motor, there is a large industrial motors and there is LT motors, then there is FHP.
Sure.
The problem actually, the weak demand which I had mentioned relates to LT motors. So even in the last quarter earnings call in the television interview, I had mentioned that the stocking by the dealers, because there is a fear of inventory getting reduced because of weak demand, etc. The dealers have been stocking less. Therefore, this will reflect for next couple of quarters. So in this quarter, what has happened because of the lesser demand and then aggressive sales by some of the small players and competition who doesn't want actually the sales to go down, and therefore price actually took a beating. And we also actually took a call. We could have remained without selling, but we thought we will sell, and then strategic calls we took actually, on account of which the margins and the MSR actually have not been have not been normal as it used to be in the earlier quarters. So I think I expect probably the next quarter is generally, this normally a good quarter where everyone wants to achieve their budget sales, etc. Things should be better than Q3 and Q4. Maybe post-election things should become completely normal.
Okay. And just to kind of clarify, the weakness is not as much on the HT motor side, right? Which typically goes into larger, cement, steel, etc. Their demand is better. Is that correct?
Correct.
Okay, fair. And okay, that's good to know. And secondly, on the rail side as well, any updates there? Because I remember we're looking to tie up with a few, or rather to tie up on the propulsion side for the Vande Bharat train sets. Any update there?
So propulsion actually, we are having an arrangement with for technology transfer. We are already working through one company in Korea.
Okay.
Propulsion probably will be self-sufficient by shortly in about 6 months' time. Other than that, no other tie-up has happened.
On that. Okay. And this one last one on the OSAT piece, and congratulations on the group and your entry into this segment. Anything more you can share? So while we did read about the announcement on the exchanges, which you plan to do, but any further details you can provide? Who have you tied up with, or you trying to tie up with? The location of the plant, vendors. Anything more which you can help us with?
So I think at this point of time, nothing has been firmed up, and all are under discussion. So we are under some kind of a confidentiality clause with respect. We are talking to obviously some foreign companies which are listed, which have also have their own regulatory requirements. So they need to get back. They need to get their internal approvals in place and then inform and be ready at some point of time when we'll be able to share. Unfortunately, today we'll not be able to share much details. Anyway, we have only submitted an application. First, the government will have to clear the application. Thereafter, only the effective steps can be taken. So the moment we have clearances from the partners with whom we are talking, then we'll be able to share more details.
Understood. Got it. Great, sir. Thanks so much, and all the best.
Thank you.
Thank you. The next question is from the line of Nitin Rao from Axis Mutual Funds. Please go ahead.
Hi, sir. Thank you for taking my question. Just continuing what Ankur was asking, let's say on the power side, the order intake and the order book is very strong. Can you touch base? Is it just also you are seeing some weakness here because of the pre-election, or this is something the bidding is still very active and bidding is still very strong here? That's my first question. And second, with respect to this strategic call, and you have been highlighting this to, I think, on every call that, pricing is something which can reverse any quarter, and you also don't know which quarter it will reverse. But here you think the reversion is in the base now from this quarter, or because this slowness might happen, as you said, post-election things should normalize. But have there been slowness just related to election, or are you seeing the clients also cutting budgets? The demand is a problem. How one should read this? That would be helpful.
So I will answer the second question. First question I want to understand a little better actually. Second question, so based on, we have extensive discussions with all top dealers in various locations. October, November, our entire team, including me, actually visited all the markets and then held on discussions with dealers. So LT Motors actually a large part of the sales takes place through dealers, through retail. So we don't get an impression that the budgets, everybody has slashed their budget and there is no underlying demand, etc. Underlying demand is there, but it is taking piecemeal. Normally a dealer stocks for 3 months and then sales take place immediately, and the push is not there. So little cautiousness is there because the price, there is a fear of price getting lower or inventory getting stuck because of this. So we believe that this may be a one-off thing, and probably the worst is over. Even I feel the realizations will be better for the next quarter.
And your inventory versus your peers, or let's say in the market, how one should read this LT Motors inventory of yours in the market? Has it become lean now, or is it still quite high?
Our inventory, we have not, our inventory is normal, as we normally keep at the same inventory level, but peers inventory, we really don't know. What's your first question?
Sir, on the power side, can you throw some light? I mean, because this momentum has been still continuing a lot, and in this quarter also order intake has been pretty strong, margins have been pretty strong. Can you throw some light over the next 6 to 12 months? How do you see this segment panning out?
So I think, the inquiries on hand is an indication.
Yeah.
I think the inquiries in transformer are close to about 10,000 crores, as I said earlier. So similarly, and the switchgear also, there's good amount of inquiry. I think I don't see any issue with respect to demand. It's a question of supply and delivery.
So that means your new capacity itself will get pre-booked in a way once it comes on stream.
Definitely.
Got it. Thank you very much. I'll come back in the queue, sir. Thanks a lot.
Thank you. The next question is from the line of Rahul Gajare from Haitong Securities India Private Limited. Please go ahead.
Good evening, gentlemen, and thanks for the opportunity. So, can you share the volume growth that you have on the transformer side?
I'm sorry to interrupt. Mr. Gajare, we had lost your audio in between, so could you please repeat your question?
Yeah, I will repeat, So, sir, my question is, can you share the volume growth, mainly in the industrial motor side and the power transformer? That's the first question.
So power transfer, we cannot give you the volume growth. We have already stated the numbers and then orders on hand. Ramesh, you can tell the volume growth on industrial motors.
See, as whatever EMA is declared up to October. In LT Motors, our growth is 29% in volume growth. And in HT, we are growing almost 33%. And fractional horsepower motors also 19%. So this is, when compared to the total EMA growth, it's much higher. For example, AC Motors EMA growth is just 10.8%. HT Motors is 1.3% degrowth actually what they have recorded, and fractional horsepower is minus 24%. So when compared to the industry growth, our growths are much higher actually.
Sir, and this is basically October data that you are sharing on the month of October.
Till month of October, because generally there is about 1-2 months lag in declaring the data. Collecting the data by EMA.
Okay.
So I don't see much difference going forward also, because our sales is better in November and December when compared to October.
Okay. So now the reason for that question was, given that we've seen, a limited traction and in the revenue growth in this particular quarter, and as Mr. Natarajan also said, that there is pressure on the pricing. That is the reason why I was thinking that while the volume growth might be there, is there amount? Okay, fine. So this is the volume growth you think is there in November and December also. And can you share what is the market share that you have in the motors business right now?
LT we have 38.8%, and FHP we have 37%, and HT Motors we are at 19%.
It's not published, no?
Yeah, published data.
38%?
Yeah, 38% is published data.
Published,
Yeah, 38.8%.
Okay.
Yeah.
Okay. So my second question is, this 550 crore of discontinued operation gains that you have booked in this particular quarter, is it fair to assume that all of this is coming from CGPower&Solutions only, or there is something else also? And after this, what will be the cash balance at the end of third quarter?
So this is the entire right back is coming from CGPower&Solutions. There nothing is pending now, CGPower&Solutions. We just closed down that entity now as per the NCLT orders. So cash balance at the end of the quarter is around 1,300 crore at consolidation levels.
Okay. Sir, given are there more entities in the process of dissolution? And if yes, could there be a substantial gain that one can expect from?
So the major entity, the major issue which was there from CGPower&Solutions, that's where this gain has come. Now there are no major entities which are left now. You can see in that segment reporting where we are reporting separately the discontinuing operation asset and liabilities.
Right. Okay. Sir, and my last question is on the power segment. We've seen an increase in the capital employed in the power segment. Is it possible you can break this item, whatever content that you can provide? And is there any issue or delay in collections? That's the last question I have got. Thank you.
No, you have to look at the ROC of the power system. So if you look at the ROC, we are well within that, better than the last quarter if you look at that.
Volumes are going up now, therefore.
So you have to look at the ROC number, right? The return of capital employed.
Yeah. I thought as much, that this is basically the work in progress that is going on with respect to your execution. There are no delays in collection for sure.
Not at all.
Okay, fine. Thank you very much and all the very best.
Thank you.
Thank you. The next question is from the line of Suraj Malu from Catamaran. Please go ahead.
Hello, sir. Thank you for the opportunity. My question is on the capacity utilization. So, could you give a sense of what our capacity utilization is across the board, both on the power sector as well as on the industrial motors side?
So I think, if you look at the motor side, we are selling more. So we are at around 80-85%. And in case of the transformers, the volumes are also increasing in that business as well. So we are touching around 85%.
Right. And the new capacity which you had announced last quarter, would that come up in a phased manner, or is there going to be a delay before those capacities come online?
So for the transformer and switchgear, they will come accepting. In switchgear, there are a number of projects there. But let me take transformer. Transformer actually will be commissioned during this financial year, maybe in the last quarter of the current financial year. In switchgear, I think a couple of projects will go beyond the current financial year. Motors actually will do it in stages, one in 24-25 and some in 25-26.
Understood. Thank you. That's all from my side.
Yeah.
Thank you. The next question is from the line of Ravi Swaminathan from Avendus Spark. Please go ahead.
Thanks for taking my question. My question is with respect to the supply in terms of motors. Have you seen over the past quarter or two more number of motor manufacturers coming into the market, looking at the positive demand which was there since COVID, and that had resulted in higher competition? Or is it that it's just the existing players who had been more aggressive in terms of pricing?
So the new entrants are still not made a big entry into the market. They're just working on it. It is the existing and especially tier 2 small players where they have grown during the COVID time when CG was not in a good this one. So their volumes have gone up. Now since the market has degrown, so they're trying to manage to retain their volumes, so they had to dropping the price. It is more of the existing players than the new players.
Got it. And in terms of pricing of LT motor, probably in the past 2-3 months, that is October to December, how much would it have dropped? And was it just the drop was because of the competitive pricing, or your copper prices falling off a bit and that also leading to pricing decline?
It is a combination actually. So exactly it will be very difficult to say how much it is dropped, but combination of raw material drop as well as some additional drop because of the competition.
Got it. And the drop would have been year on year something like a high single digit number or probably lesser or higher?
Yeah, it's high single digit number.
Understood. Thanks a lot, sir.
Thank you. The next question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah, good evening, sir, and thanks for giving me an opportunity. Most of my questions have been answered, but just, you made a comment that hopefully fourth quarter is typically better, and we can see an improvement in terms of both demand as also pricing as we move ahead. Could they leave in view of the upcoming elections a little bit of typical, little bit of a weakness into the next 2 quarters and then normalizing post that?
So that is a hope and that is a belief. Hello, Bhumika, how are you?
Good, sir. Good, sir.
Yeah, please. So I think, I've been constantly in touch with my team. Even today morning, actually, they have told me that the things are looking up, and then definitely what I said earlier, the realization will be better in next quarter, is based on the feedback I received.
Okay. And as our capacity comes up, right, in phases over the next 2 years, and if there, even the peer set kind of expands capacity, could there be that, that margins may not really come back to the earlier levels that we were at? Or could there be risk to that number as demand normalizes into, say, down the line 2-3 quarters?
So just based on 1 quarter, one-off thing, I don't want to come to that conclusion. If you see a company as a whole also, YTD, if you see YTD 9 months, our margins are even better than the EBITDA margin for YTD is 16.1% against 22-23 EBITDA margin of 15.4% for the company as a whole. If you take similarly the industrial, so YTD margin is 15.3, last year was 16.4, year before was 12.7, then PBT to sales. EBITDA margin, if you take for industrial, is 15.9, compared to last year was 17.4, year before was 13.5. Last year, as you know, was an exceptional year. We got 19% margin in 1 quarter, etc., which may not get repeated. I think probably in this quarter itself, if you had held on to not to sell and then we just held on. See, we are a volume player. When I sell more, the price will further decline. But if I don't sell, then my market share can go up. In a weak market, I have increased my market share from 35 to 38%. Therefore, I would think that this is just a one-off thing. There are several levers available for you to keep profitability and improve margins, and then keep the way that you have been performing. We will pull all the levers actually and do our best to retain margins.
Sure, sir. This is very helpful. So just on railways, if you can just give some color on how the revenues are, what the backlog is looking like, and what are we seeing the growth trajectory as we move ahead? If you can just comment on that.
So I will ask Mr. Chidambaram to respond. I think the going has never been as good as is now in respect of order booking, etc. Mr. Chidambaram, could you just answer this question?
Thank you, sir. Thank you. We are primarily into the rotating machines, motors, which is different from the other motors. These are traction motors, which are used for pulling, and the control system, which goes with the locomotives. So to this year, generally we are booking around 20% on motors and also on the propulsion of the total order. This year, our order books would be almost 68% higher than the order books we had in April 2023.
Okay. So could it be possible to share the absolute number of revenues in the 9-month and order backlog as we stand today?
Yeah, if I say we started in March 2023 with a order backlog of 800 crores, we would start April 2024 with an order backlog of 1400 plus crores.
Oh, okay. So that's quite an improvement.
This after completing the revenue of 1200 plus crores. So we have consumed 400 crores and we would be carrying forward 1400 crores.
Wow, okay. So there is a lot of traction in terms of the activity. Any large orders which are there in the pipeline that we are bidding for and are hopeful of getting any quantum that one can define, which can possibly get finalized?
So Bhumika, actually we can disclose only when we get the orders, not on hopes.
Sure, sir.
Yeah.
Sure. Great, sir. This answers my question. Thank you very much and
welcome. Yeah.
Thank you, sir. Thank you, ma'am.
Thank you. The next question is from the line of Amit Mahawar from UBS. Please go ahead.
Hi, sir. Good evening. I just have one question on exports. Right. So 9-month, how much have we done on new orders in export across motors and power systems? And FY25, if you can throw some color on, how are you looking at exports growth between the two segments? Thank you.
Yeah. So you have the correct figure for the entire. So we'll come back to you with the figure actually. The exports, we are taking steps, especially on the motor side to increase our share of exports next year. We are in the process of appointing people, appointing dealers, stockists, etc. So I think many of the moves that we are taking now are expected to bear fruit by second half of next financial year. So far, I think how much?
85% growth in exports. And what is
the absolute amount?
Absolute amount is.
So we learn about 250 crores totally, 100 plus in
for the full year, we have done almost around 400 crore plus, sir, at company level.
For all put together. So we have done about 400 crores so far in exports between all the three divisions.
Fair. So 300 crore last year has moved to 400 YTD, if I'm not wrong.
Yeah.
Second part of maybe my question was more on the transmission side. Globally, we're getting a lot of color about capacity constraints in power transmission equipment. And CG Power has a very significant cost advantage on, transmission range. So FY25, what kind of growth or business can we look at? And maybe the power division people can help me. Thank you, sir.
So I think, we have also expanding our capacities both in transformer and switchgear. But, these capacities will not be available. Increased capacities will be available only by the end of the year or the last quarter of the year. Therefore, we may not be able to get a full advantage of this. Nevertheless, I think we can target about 25% minimum growth on the top line in these two lines, both transformer and switchgear, power as a whole.
Very helpful. But generally, unlike motors, in power, the orders are relatively medium cycles. So clients can always give you order if you are ready to deliver beyond 6-8 months. So I was just hoping that will help us.
So we agree with you. Some of the orders we got recently, back some big orders also. So we are working hard to just see how to complete this expansion fast. We are also looking at other opportunities to expand our operations.
Got it, sir. Thank you, and good luck to the entire team.
Thank you.
Thank you. The next question is from the line of Shubhadeep Mitra from Nuvama. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So first question is with regard to the railways business, where you did mention that you are looking at a tie-up with a Korean partner on the propulsion system. So am I right in understanding that once this tie-up is in place, you will be able to bid as a propulsion partner and you may only require a partner on the wagon side?
No, so Chidambaram, can you answer this question? This is not that easy. There will be more because you also need an experience. For example, if you want to participate in a tender, it is not enough if you know things. You must have a demonstrated track record of having built a train and having run a train like that. Therefore, without a partner for bidding, actually, it will be difficult to enter the tender.
Understood. So any partnerships that are being thought of on that line as well, beyond the propulsion side?
So I said, while there has been a lot of efforts, nothing has come to a stage where we'll be able to say anything big. So everybody is probably waiting in the wings, and therefore a lot of efforts are going on.
Okay, sir. Understood. And this will be for the propulsion system, both for locomotives as well as train sets?
Train sets mainly.
Mainly on the train sets, on the EMA, sir. Okay.
Locomotives, we already have the technology.
I'm sorry, could you repeat that?
Locomotive, we already have the technology. If you break the technology in two parts, the technology which sits on board and technology which is underslung, the technology we will have by March, April next year would be underslung. We already have the onboard technology for locomotives.
Understood. And for the train sets where the TCMS, etc. is concerned, that's where you will probably need a partner, right?
No, we are buying the technology itself. So we would be manufacturing ourselves with our so-called our own technology brought out from a Korean partner.
Ideally. Okay, perfect. That answers my question. Secondly, on the power segment. Now, clearly this has been a lower size as compared to the industrial piece, but with the way we are seeing high voltage transmission capex coming up at the macro level in India, and what we hear from Power Grid, et cetera, is that there is an 18-month waiting period for high voltage transformers. And there are some players who are even ordering out their high voltage transformers in anticipation of order wins. So are you expecting then that the inquiries and the potential order wins on the high voltage transformer side can actually start seeing a pickup, even though your own capex might take some time to come?
So Ajay?
Yes, sir. Thanks for this opportunity. Yes, we see a lot of traction in this. The projects are already started coming in, and yes, we have booked some orders anticipating the expansion in the capacity for deliveries beyond 12 months also. So these projects are already coming now for decision.
Understood. So in your opinion, how large can this market size be on an annual basis?
We are expecting a CAGR of around 10 to 12% in this.
On the high voltage transformer side?
Right.
Okay. And for the rest of the business, so overall, if I have to look at the power segment, so what I understand is in the largest chunk of your business, probably going ahead, power and railways can overtake the industrial piece. So just wanted to get some thoughts from you that over the next, let's say, 2 to 3 years, how do you see both these high growth pieces of power and railways panning out, and how large a piece can they become in the overall pie?
Hello? Can you repeat the question, please?
Yeah, sir. Can you hear me now?
Yeah.
So my question was that while industrials has been the larger chunk of your business, I think going ahead, it is the power and the railways piece which are probably going to see higher growth, at least based on the macro tailwinds that we are seeing. So in your opinion, can we see power plus railways becoming a larger chunk of your overall business, let's say over the next 2 to 3 years or 4 years, vis-a-vis your normal, let's say, low voltage motors and the rest of the industry?
So if you ask me about comparing with industrial, motors means definitely motors also will grow. We have, as you know, we are doubling our capacity for motors. So once we start exporting and then operating the enhanced capacity we are able to operate, motors also will grow much faster than the other two businesses.
Okay, and the expected CAGR in motors would be 20% plus?
20, and then with the power business, maybe because their base is low, and then we are only just growing 25% in those businesses.
So motors around 20, and you're saying power can be 25% or thereabouts?
Correct.
Okay. And so largely on margins, now naturally we've seen spectacular numbers in terms of margins versus peers. So are we anticipating that with higher top line, better operating leverage, can we go beyond this, let's say, 15% kind of barrier and look at a higher number on margins on an overall basis?
So I think if this is a stable level, anything higher, I think as I said earlier, margins are a combination of input costs, selling price, product mix, all the three put together. So, and then plus there are internal efficiencies what we try to get because of procurement efficiency, our lean manufacturing. So I think, we have come from a low level, we have come to about 15 and a half. So I think 15 to 16 looks to me a stable range.
Understood, sir. That answers my question. Thank you so much.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. I have just one question. You have highlighted about the increasing opportunities in the high voltage equipment space. So have we created a roadmap to develop a 765 kV GIS solution? Because we see very heightened tendering activities happening in this particular space. So either on our own or through a technology partner, just the way you have done for these propulsion systems, as you have mentioned, I believe we are already working towards that 440 kV GIS. You have mentioned that you plan to commercialize that in FY25. So is that on track, and our plans on 765 kV?
Ajay? Sir, Mukul?
Yes, please. See, exactly, sir, our 400 kV GIS project development is on track. As of now, we are not targeting 75 kV because the normal lead time for a product like 75 kV can be anywhere 3 to 4 years. So as of now, we are not targeting that part.
Understood, sir. Thank you very much for answering that question.
Thank you. The next question is from the line of Akash from Dalal & Broacha Stock Broking. Please go ahead.
Hello, sir.
Yeah.
Hello.
Yes. Hello, please go on.
Hello.
Yes, Akash.
Yeah, sir.
Your line is
Thanks for the opportunity. My question was basically, in spite of our capacity utilizations staying close to our peak levels, why are our margins going down, especially in the power segment of the business? The industrial system, we understood that we are trying to protect our market share there. But any guidance on the power side?
Where are margins going down?
On the power system side. Transformers.
If you look at margins against the last year quarter, we were at 11.7, and this quarter we are at 15.3.
CBIT to sales, if you see our press release, so from 11.7 it is 15.3. EBITDA actually from 13.5 moved up to 16.6. The margin
Quarter on quarter basis, sir.
Huh? Yeah, quarter on quarter only I'm saying. Quarter on quarter. So last year was from 17.9 to 16.6. You see, we can't just ideally compare. This depends on product mix, input cost. What prepared last year, we cannot say like that. I think this power actually is a very decent margin, and I'm generally I've compared I'm not able to see many other companies having this kind of margin. I have looked at numbers of other players also. Exactly, we cannot. Each order will be different in a transformer or a switchgear, etc. Each order pricing will be different because all tender driven. Prices are common for here. I don't get an extra price. Prices are because we compete on tender, we get the price. How margins I get is how I efficiently manage my resources, what are my internal efficiencies, how do I procure. All these things will constitute margins here.
Understood, sir. So any future guidance for the coming quarters? Will our margin increase or will more or less remain at the same level?
We don't give guidance to that minute level. Margins, while we don't expect any margins to come down, but generally we don't give as a guidance on margins.
Okay, sir.
Yeah.
Thank you. The next question is from the line of Vikas Srivastava from RBC Financial Services. Please go ahead.
Yeah. Question was if you could throw some light on the consumer business, how it's going, new products, whatever. I know you're not in a position to share too much information, but whatever you can share on the consumer products.
No, we are definitely working on these products, and we have launched geysers, even some new products in this season also in October, and we have done very well with respect to heaters. So our focus is there, and even in pumps also we are launching very soon for agriculture and industrial pumps, that is small range of industrial pumps. So our focus is there. We are steadily growing on this product.
By when do you think in the next 2, 3, 4 years it will become a material enough to be reporting separately, segment-wise? When do you think there's a possibility there?
So one thing, 3-4 years looks a good time for whatever you said. But if fortunately, if other businesses grow bigger, and then, then that 10% threshold which is required for separate reporting we may miss. But anyway, our intention is to grow this business over the time frame which you had indicated.
And any particular regions or products which is information in the public domain which you could share with us now? In terms of pan-India, south, north, east, west, and any products which is information which is already available in the public domain.
You are asking about our penetration?
Your penetration, geographical as well as product in various parts of the...
We have taken a path for complete pan-India because, we are, as a motor industry, we are well known in the industry and our products were there in the market prior to 2015. So we have not taken a route of, because generally what happens if somebody who's newly launching the product, then they take some particular region and enter and test it and all. But we have not done that. We have taken the complete range because it's re-entry for us. So the pan-India, we are penetrating for both the products.
And the route to market is fairly well established now. And is there any confusion in the market with the brand name of another competitor in the market on this, or is it, or what are you facing there?
So not to our knowledge. There is no confusion, not to our knowledge.
And the route to market infrastructure is in place in terms of, do you expect any major investments here going forward?
As of now, fairly well placed, but if we have to go much faster than what we are going, and we will have to do that, and which we are working on it.
All right. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request that you rejoin the queue. The next question is from the line of Suraj Malu from Catamaran. Please go ahead. Mr. Malu, your line is unmuted. You can please proceed with your question.
Hi, sir. Can you please let us know the order intake segment-wise for this quarter?
So we don't provide the order intake. We have got the unexecuted order book as on the last day we have already given. Other than that, we don't share details.
Okay. Thank you, sir.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah. Good evening, sir. Thanks for the opportunity. My first question is, can you participate in the 6,000 HP locomotive tender? Do we need a partner to participate? And are we thinking of participating?
Which number?
Yeah, we need a partner because this tender particularly asks for locomotive experience. We have all the products that goes into the locomotive, but not the locomotive experience person. So you need a locomotive OEM to become eligible to participate in this tender.
Understood, sir. My second question is, sir, are you looking, as you said, power system is going to stay, opportunity power system is going to stay for much longer time. I think you mentioned they're looking to increase your product portfolio. In your opinion, do you think you can develop something in the medium term or tie up with somebody to increase your opportunity basket?
Opportunity basket in
the sense that you can target the new area, something like you're developing 40 kV GIS, so something which is missing in our product portfolio as of now.
So there are several initiatives in the offing, but unless something takes shape, we cannot comment.
Understood, sir. My last question is, how do you think the OSAT capital expenditure, which is talking about 791 million, will it be front-ended, or do you think this will be mostly spread out?
So the expenditure is to be incurred over a period of 5 years.
It is spread out mostly. Okay, understood, sir. Thank you, sir. Thank you, Mr. Lal. Thank you.
Thank you. The next question is from the line of Abhineet Anand from 3P Investment Managers. Please go ahead.
Yeah, thanks for the opportunity. Based on the current capacity that you have for your transformers, switchgear and motors, what can be the max revenue potential and the increased capacity that you are putting by 25, let's assume, what could those potentials go up by?
So we cannot answer this question offhand. This is only a earnings call for this quarter. So this, I think we need some more time to when it will come up and what kind of product, because it will be, again, what will you product mix, etc. So it will, we won't be able to answer. I don't want to give you any wrong answer.
But on the current capacity, if you can throw some light?
Current capacity, we are currently operating the transformer, we are operating, let's say 75%, and then you can calculate, another 25% increase. We cannot operate at 100%. Some repair jobs, etc., will have to be done, etc. So year on year, I would say that, we have already committed that 25% growth in this possible indicated. I think that you can take it as an annual sales that is possible at the current level.
Okay, sir. Thanks.
Yeah.
Thank you. As there are no further questions from the participants, I now hand the conference over to Ms. Renu Baid for closing comments.
Thank you, everyone. On behalf of IIFL Securities, I would like to thank the management for the time and audience for being patient. Sir, any closing comments from your side?
So except that as whatever I've said, we are working hard and we will continue to work hard to bring the best. We hope Q4 will be better than Q3. And thank you for all the participating, for the interest shown by all the participants, and thank you, also.
Thank you.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.